Hi, Gary here. It's December and it's tax planning month. At this time of the year, you're looking for deductions or credits or trying to mitigate and reduce taxes for 2014. Now, one of the things that came out of the tax code that was passed in early 2013 was this permanent tax on capital gains, where there is a portion of capital gains, depending on your taxable income, that's in a 0% tax bracket. We want to take advantage of that possibly. So how might you do that? Well, you probably recall that you can give $14,000 per person every year. So if it's you and your spouse, and let's say you're giving to a child and their spouse, well then that's 14 plus 14 times the two of you, which is 28,000, times the two of them, which is 56,000. So here's a typical thing we get asked. Hey, my child's thinking of buying a house. Mortgage rates are down. Really makes sense to buy right now. They need $50,000. And so how can I do that? Now, a lot of you might go out and say, gee, I'll sell something and I'll pay them and I'll gift them the $50,000 of cash. In the process of selling something, you could create some capital gains tax for yourself. So let's look at a setup here. In this first illustration, we have a couple, married couple. They have $250,000 of taxable income. This is after deductions and exemptions, and a child with $50,000 of taxable income. Same thing. Now, they decide to take a $50,000 worth of stock that has a cost basis of $25,000. Therefore, has a gain of $25,000. So what they do is they sell the stock. They get the proceeds of $50,000. They gift it to the child and spouse, and in process pick up $25,000 of gain in this 19% capital gains bracket you can see here, and that costs them about $5,000 of federal income taxes. Now that's one way of doing it, but we have a better way for you. In this next scenario, we're going to gift the stock over to the child, as you can see here, out of the 19% bracket into the 0% bracket. And then what the child is going to do in this next illustration is sell the stock, pay no capital gains tax, still end up with $50,000. So the end result is $5,000 less is paid to the federal government to take advantage of these two different tax brackets and in making this gift between family members. Just a kind of a neat strategy. It works in many different scenarios. So you may want to contact your accountant, your CPA, your most trusted advisor, us, to walk through this strategy or other strategies that you can utilize between now and the end of the year to take advantage of some tax planning prior to the year closing out. So until next time, enjoy.